All right, so last time we walked through the 2.2 tax systems presentation, and you were to do this 2.2 tax bracket practice worksheet. So let's walk through this together. All right. So I realize this can be a bit intimidating, a bit daunting when you first start to work with some of this. I completely get that. But as you continue to practice this, it does become easier and it does become more intuitive as you work through this. All right. So we start off with on page one, we've got three different individuals who are filing as a single filer. We've got this tax bracket at the top with the various percentages and then the income ranges that apply. And then the standard deduction is listed at the bottom. So we're going to use that for this table for all three of these first scenarios. Number one says Andre has a gross income of 39,000. How much does he owe in federal income tax? So first, what is his taxable income? We are going to take his earnings, 39,000, minus the standard deduction of 6,300, which is listed there, and that'll be his taxable earnings, 32,700. All right. So even though he earned 39,000, okay, he's able to take that deduction as tax-free money because again, the government realizes that we all have certain, um, you know, tax exempt expenses, spending on healthcare, spending on charitable giving, spending on maybe student tuition repayments, and so on. So we all have these various expenses that would be tax exempt. And so you can itemize that. You can go through and actually list all those expenses to see if you would qualify for a larger deduction. But in most cases, individuals take the standard deduction. And for this class, that's what we'll use. All right. So we take those dollars that are tax exempt, we subtract those out. We're at 32,700. All right, so what is his marginal tax bracket? In other words, what is the last bracket that his taxable earnings fall into? All right, so 32,700 would fall right into this range, all right, which is 15%. Okay, so that's his marginal tax rate. Now, going back to the misconceptions, one misconception is that, you know, because he falls in the 15% range, that all of his earnings are taxed at 15%. And to take that a step further, if we didn't take into account the standard deduction, if we looked at 39,000, he would actually fall in the next range, the 25% range. So you could even extend that misconception to think that he would have to pay 25% tax on all of his earnings. All right. And both of those would be untrue. Both of those are misconceptions. So not all of his income is taxed. And in this case, that deduction was enough to lower him into, or, to push him into the lower tax bracket of 15%. So even if we thought that just his taxable dollars were taxed at the same rate, that would be untrue as well. All right. How many dollars are taxed in his marginal tax bracket? So how many dollars fall into this range that will be taxed at that 15%? All right. So in order to do that, we need to figure out how many dollars fall in there, which would be the last taxable dollar that he earned, $32,700, minus the dollars that fell into any earlier bracket. For him, it's only one earlier bracket, which is $9,275, which were taxed earlier at 10%. So we're not going to tax those $9,275 at 10% and 15%. Those dollars that fall into that range will always only be taxed at the lower rate. All right. Only the dollars that fall into this range will be taxed at 15. So we're taking the last taxable dollar that he earned minus any dollars that were taxed at a lower rate. All right. So in other words, this 92.75. So 32,700 minus 92.75 is 23,425. All right, now we need to calculate his total tax due. So now we're going to look at what is what amount of tax would he owe for this first tax bracket, and then what amount of tax would he owe for the next tax bracket. So for the first tax bracket, he's taxed at a rate of 10% or 0.10. All right. And so we need to know all the dollars that fell into that range, 9,275. And in this case, we subtract zero because it was the first tax bracket. So there weren't any other previous dollars taxed at a lower rate. So we're still at 92.75. So 10% of 92.75 is 927.50. And then 15% or 0.15 of the dollars that fall into this next range, which again, we happen to already calculate for part C, that 32,000, where am I? 32,700 minus 9275, which we know is 23,425. All right, so 15% of that 23,425 is 3,513 and 75. And then we'll just add up the two amounts, okay? The dollars that are owed at the 10% rate, and then the dollars that are owed at the 15% rate. So 927.50 plus 3513.75 is 4441.25. And then when we're calculating total federal or state tax due, we round to the nearest dollar. So that would be 4441. Okay. That's it. Number two, Gabby made 72,300 in the calendar year. How much does she owe in federal income taxes? All right. So first, what is her taxable income? We're going to take the 72,300 minus her standard deduction of 6,300. All right. And that leaves us with $66,000. So even though she earned $72,300, only $66,000 is going to be subject to federal income tax. What is her marginal tax rate? So now the 66,000, which bracket does that fall into? That falls into the 25% bracket. All right, because it's within that range. So she will fall into the 25% marginal bracket. How many dollars will be taxed within that marginal tax bracket? All right. So even though the bracket itself goes up to a maximum of 91,150, she didn't earn that much in taxable earnings. So we need to stop at her last taxable dollar, which was $66,000. All right. But now we need to subtract out any dollars that were taxed at a lower rate. So the first $9,275 were taxed at 10%. The next roughly 28,000 was taxed at 15%. So altogether, 37,650 were taxed at either 10 or 15%. So we want to make sure that we're not taxing that amount again. So that's why we need to subtract that out, 37,650 from right here, so that we can isolate only the dollars that are within that range. All right. So notice that we're not subtracting by the top dollar or the lowest dollar of this range. We're not subtracting by 651. We're only subtracting the dollars that had previously been taxed. So the maximum dollar of the previous tax bracket. All right. So 66,000 minus 37,650 is 28,350. All right. So only 28,350 will be taxed within that 25% range. Now, how much does she owe in total? So first 10% of that first range, she's going to max that out. And that was 9275. Again, minus 0 is 9275. So that still is $927.50, just like it was with Andre up here, right? He maxed out that first bracket, went into the second bracket. So the max amount for that first bracket that anyone will owe is $927.50. And so Gabby filled up that range as well. So the max she owes for that first bracket is $927.50. Now for the 15% range, she happens to fill that up completely as well because she made it into the 25% bracket. So we're going to take the maximum amount of that range, 37,650, minus the dollars that were already taxed at 10%, 9275. All right, so that range is 28,375. We're going to apply 15% to that amount, and that comes out to be 4256.25. Then Gabby goes into the 25% bracket. All right, the 25% bracket goes up to 91,150, but again, the last taxable dollar for her was 66,000. And then subtract out the dollars that were already taxed, either at 10% or 12%, which is 37,650. We already calculated that in part C. Okay, I was kind of leading you there to it. 28,350. So 28,350 times 25% is $7,087.50. Now we'll add these up to find her total tax due. All right. and that's 12,271.25. And again, because we're dealing with total federal tax owed, all right, we're going to round that to the nearest dollar, which is 12,271. All right, looking at number 3, Chris has a gross income of 194,800. What is their total tax due? So first, their taxable income, 194,800 minus the standard deduction. Given this year, okay, was 6,300. So we subtract that 6,300 out, we're left with 188,500. Okay, what is their marginal tax bracket? So that 188,000 falls into this range, the 28% bracket. All right, so they're going to fill up the 10%, the 15%, and the 25%, and some of their money now is going to be taxed at 28%. How many dollars are going to be taxed in that tax bracket? Well, up until that point, up until the 28%, $91,150 is taxed at one of these lower rates. So we need to take the last taxable dollar, 188,500, minus any dollars that were taxed at previous rates. Again, the upper limit of the previous bracket. So fell in the 28% bracket. So we need to take out the upper limit of the 25% bracket, the one bracket above that. So that's 91,150. So 188,500 minus 91,150 is $97,350. That's how many dollars will be taxed at 28%. So even though 188,500 total dollars will be taxed, only 97,350 will be taxed at that 28%. So what is their total tax due? So 10% of the entire first range, which was 9275, is still 927.50. 15% of 37,650, right? They're filling up the entire 15%. So we're going to the maximum amount minus the dollars that were already taxed, leaves us with $28,375 falling into that 15% range. That's 4256.25, just like it was up here with Gabby, right? She filled up that first bracket. Chris filled out that first bracket. Gabby filled out this second bracket, maximum amount for that second bracket, 4256.25. Chris filled out their second bracket, 4256.25. Now, unlike Gabby, Chris filled up entire third bracket. All right, so we're going to take the upper limit, 91,150, okay, the upper limit of that 25% bracket, minus the dollars that had already been taxed, 37,650. And that means this bracket has $53,500 in it. Okay, so 25% of that is 13,375. And then finally, Chris is in the 28% bracket. So the last dollar that was taxed, 188,500, minus the dollars that were taxed either at 10, 15, or 25%. So the maximum rate of the previous bracket, 91,150. Okay, we already calculated that in Part C is 97,350. Okay, so 28% of those dollars is 27,258. All right, and now we add up those $4 together. 927.50, 4256.25. Put some spaces in here to make it easy. Plus 13,375 plus 27,258 equals 45,816.75. Rounded to the nearest dollar is 45,817. All right, so again, the process can be a little confusing at first. It can be intimidating, but the more that you practice this, the more you go through it, the easier it does become. All right, one more calculating. Now we're looking at a married couple that's filing together. So the percentages stay the same, but the ranges change and the deduction changes. All right, so Alex and Shannon are married. They filed together. They earned $158,100. but they get to subtract the standard deduction of 12,600. You'll notice that that's 2 times the deduction amount of an individual to account for the fact that there are 2 people filing together. So 158,100 minus 12,600 is 145,500. Their marginal tax bracket, so that 145,500 falls into this range, the 25% range. So they're going to fill up the 10%, 15%, and then partially fill some of the 25%. How many dollars are in that marginal bracket? So so that they don't fill that up. So we're not going to use the upper limit of this range. We're going to use the last taxable dollar that they earned, 145,500, minus the dollars that were taxed either in the 10% range or the 15% range. So that's the maximum, that's the highest dollar amount of the previous bracket. They're in the 25% range. So we need to take the highest dollar amount of the previous bracket, the 15% bracket in this case, that's 75,300. So 145,500 minus 75,300 is 70,200. All right, now calculating their total tax due, 10% of the first range, 18,550 minus 0 because it's the first bracket. Okay, it's still 18,550. 10% of that would be 1,855. 15% then of the second bracket, they fill that up. So we're going with the upper limit, 75,300 minus the dollars that were in the first bracket, 18,550. And that is 56,750 in the second bracket. All right, so 15% of that dollar amount is 85,1250. And then finally, 25% of all the rest of the dollars, okay, it goes up to 151,900, but their earnings, their taxable earnings capped at 145,500 minus the dollars from the previous brackets. So we're subtracting those out so they're not taxed multiple times. That leaves us with 70,200, just like we calculated in Part C. All right, so 25% of 70,200 is 17,550. Now we'll add these together, 1855 plus 85,1250 plus 17,550, and that equals 27,917.50. Rounded to the nearest dollar would be 27,918. All right, so the exact same process that we did for on the 3 single filers on page 1, except that we have different dollar amounts that we need to use. All right, number 5, explain at least one common misconception people might have about how tax brackets work and how they actually work. So I mentioned this earlier, right? You might have a couple of different misconceptions. Erase that. Okay, so the first misconception might be that you're taxed on all of your earnings, and that's not true. Okay, there's a deduction, either a standardized deduction or an itemized deduction that you're eligible for that decreases your taxable earnings or your taxable income. Okay, so that's one misconception. You don't pay federal income taxes or state income taxes on all of your earnings. All right, the more common misconception, okay, misconception 2 is you're taxed fully at the top tax bracket that your income falls into, right? So for example, if we look at number 4, Alex and Shannon, their taxable earnings was 145,500, which was in the 25% range. So a common misconception is because their income falls within that range, all their income is being taxed at that percent. And that's not true. We have a tiered system or a graduated system. Okay. So the first several hundred, several $1,000s are taxed at a low one rate. Then the next several $10,000s of dollars are taxed at a higher rate. The next chunk of income is taxed at an even higher rate, and so on. So you're taxed at increasing rates in each bracket, but you're only taxed at that rate for the dollars that actually fall within that range. All right, and so what happens is that means that the actual tax rate that people pay, okay, their average rate across all of their dollars are going to be much lower than their marginal tax rates. And there'll be a question later on that talks specifically about that. Okay, so people who confuse these two might think that this married couple, for example, is paying 25% in income tax, and they're not. Okay, they pay much, much lower than that. All right, getting into some of the multiple choice. Number 6, which of the following is true about FICA taxes or payroll taxes? Okay, the employee and the employer share the 12.4% Social Security and 2.9% Medicare, right? So remember, it's called a payroll tax because both parties of the payroll, the earner and the payer or the employer, have to pay in, right? So that's why we calculate when we're all of the practice that we've done up to this point, we use 6.2% as the percentage being taxed for Social Security and 1.45% for Medicare. Okay, that's true for the individual, but then that same percentage applies to the employer, right? So total 12.4% goes into Social Security and 2.9% goes into Medicare. The employee or the individual only pays half of that, 6.2%. They pay half of Medicare, 1.45, and the employer pays the other half. But combined, they share that 12.4 and 2.9% burden. All right, number 7, the United States has a progressive tax system. That means that for 4, you pay different tax rates across different tax brackets. Those who earn more are typically taxed at a higher rate. Number 8, which is the following is true about income taxes. This would be number 4. Okay, income taxes can be collected at the federal, state, and local level. All right, number 9, if someone asks you what your marginal tax rate is, they're asking you what your total tax, the percentage based on your total income, and therefore which tax bracket you're in. Again, that doesn't mean the actual percentage that you're taxed. Your marginal tax rate is just the tax bracket that you in, the highest percentage that you pay on any of the dollars that you earn. All right, number 10, if someone asks you what your effective tax rate is, they're asking you the average rate of tax that you pay over your entire income. Okay, so they're asking what is the actual percentage that you paid on your earnings during this year. All right, number 11, Sarah and her brother Steve both make the exact same amount of money. They pay different amounts in taxes. What's one reason they might differ? Okay, so one reason is that they might have different deductions, right? Maybe Sarah took the standard deduction and maybe Steve had a lot of medical expenses this year and itemized his deductions to the point where he qualified for a larger deduction, right? So that could be one reason. Maybe they have different filing statuses. Maybe Sarah files as a single filer, but Steve files as head of household, which means that the bracket ranges will be different. Or they might live in different states. They would have the same tax for federal, but they may have different state income taxes because every state operates their own income tax system differently. They have different brackets. If they have a progressive system, right, they have different rates and different bracket amounts. Maybe, we know that some states have a flat income tax, right, where everybody pays the same amount. We know some states don't have a state income tax. All right. And so living in different states would most likely lead them to be paying different state income taxes, even if they have the same federal income tax. All right. And then finally, we have one more tax table here. We have different percentages, we have different ranges, different standard deductions. The number 12 percentages listed above are the marginal tax rates for a different year than the table back on page 1. What is the marginal tax rate for a single filer with 75,000 taxable income? All right, so single filer, we're going to be looking in this column for 75,000 taxable dollars would be in this row. Okay, so that would be 22%. 13, what's the maximum amount a married couple filing together? So now looking in this range or this column could make and still fall within the 24% tax bracket. So 24% tax bracket maxes out at $329,850. $329,850, which is their taxable gross amount to still fall within that 24% range. But it didn't ask us what their maximum taxable gross amount is, right? It asked us just the maximum amount. So in order to get down to that taxable gross amount, they also would have that would have been after they take out their standard deduction. So we can add that standard deduction back in and see that they could earn $354,750 for their max total gross. Okay. Had they earned 354,750, they would still fall within the 24% tax bracket because they would take that 354,750 minus that standard deduction to get down to that maximum dollar amount still within the 24% bracket. All right. So they could earn 354,000 and still fall within this range, even though it maxed out 329,850 because of that standard deduction of 24,900. All right. And then finally, would you expect the average tax rate, meaning the effective tax rate paid by taxpayers, to be more or less than their marginal rate? Explain by providing an example to illustrate your point. All right. So if we went back to number 4 here as an example to illustrate this. All right. So from number 4 above, their total gross income was 158,100, right? Which means their taxable gross income was 145,500, right? So I'm just taking this straight from here. They earned 158,100 and their taxable gross after their deduction was 145,500. Okay. We also know that they paid in federal income tax 27,918. Okay, that's what we calculated here on Part D, 27,918. All right, so the effective tax rate or the average tax rate would be equal to the amount of taxes that they owed, 27,918, divided by their total earnings, 158,100. And that equals 17.66%. Their marginal rate was whatever tax bracket they fell into, right? And we saw that they fell into this 25% marginal tax bracket. All right. So we can see that the effective rate is much less than their marginal rate. So they fell into the 25% bracket, but not all of their dollars were taxed at 25%. That was the maximum amount that they were, or the maximum percent that they were taxed at, right? Some of their dollars weren't taxed at all because they were able to deduct it. Some of their dollars were taxed at 10%. Some of their dollars were taxed at 15, and only some of their dollars were taxed at 25. So if we average different numbers and the highest is 25, of course that average is going to be less. All right. So the effective rate or the average rate, you'll hear it referred to either way, is always going to be lower than the marginal rate. All right. So the average rate is always less than the marginal gracious tax rate. All right. The marginal tax rate is just the highest percentage that they're taxed at. It's the last dollar that they're taxed at, but the average rate takes into account all of the dollars that fell into lower brackets, as well as the deduction that wasn't taxed at all. Okay. So I hope that made some sense for you. If it did, great, you're on the right track. If it didn't, or if there were still things that you're kind of struggling with, we'll have more practice today. All right. So if you head back to the 2.2 page on Schoology, you'll notice that there's an additional tax brackets worksheet. This tax brackets practice worksheet is what we did yesterday, is what we just talked through. This 2.2 tax brackets worksheet is what you'll do today. It's set up very similarly. Okay. So here's the tax brackets worksheet. You've got, again, a tax table here. Okay. Pay attention because the percentages are different, the dollar ranges are different. So I try to switch it up just to make sure that you're not getting in the habit of overly relying or trying to memorize the tax percentages or the ranges because they can change every year. The percentages don't necessarily change each year. All right. But the ranges change every single year. The standard deduction changes every single year because incomes tend to go up each year, because prices go up each year, right? Because they're both subject to inflation. These ranges tend to expand each year and the deduction increases a little bit each year. All right. So for questions 1 through 3, again, you're using this and you're assuming that they are single filers. All right. And then for number 4, you've got Alex and Tori. They're married and filing together. So you'll use the joint married and filing joint together. So just 4 practice problems again. doing those tax tables, calculating those taxes, and then finally, just questions on the general understanding of these tables. All right, on page 3. So you've got those to get through. And then on the 2 point, if we advance into the 2.9 unit review, okay, again, just as a reminder, worksheet answer keys are published here. Okay, so up until this point, everything that we had been talking about is been published. I will publish right now the worksheet that we just went over. So if you need to review that, you can. All right, so that's in the Unit 2 worksheet answer keys. What I'd also like you to do is this Unit 2 review. All right, and so we've spent the last couple days looking just at tax brackets and tax systems. So I want to go back and make sure that we kind of review and we're familiar with those earlier concepts that we talked about. So page 1, we've got wages and salary. We've got gross earnings versus net earnings. We've got some practice calculating our net pay. We've got questions about additional compensation. Remember, non-wage compensation, things like those paid benefits. You know, when your employer contributes to your retirement account, when they pay for insurance, when they may help with tuition reimbursement, et cetera, et cetera. Okay. Question making sure you understand overtime, tax withholdings, tax systems, FICA taxes. Okay. So everything on page 1 is just kind of reviewing your understanding of the general concepts. Page 2, we've got a paycheck here. All right. Or a pay stub. And so you need to answer some questions based on that pay stub. We've got more in-depth question here where we're actually calculating gross pay, the deductions and net pay. And then again, a little bit more practice with some tax brackets. All right, so 2 worksheets to complete today. We'll go over both of these next time that we meet. We're setting ourselves up to be ready to assess on this unit. All right, so get these 2 worksheets done. As I always say, please let me know if you have questions, if you struggle, if you need any more help or reinforcement or just additional practice or examples. I'm happy to create those for you or provide those for you. You just have to let me know where you're struggling with. All right, otherwise I'm going to turn you loose. Have a great day, everybody. We'll talk next time. See ya.